Welcome back to your ultimate pit stop, Piston Pundit. Today, we're digging into the EV market's lesser-known challenges. While EVs capture headlines, the reality is more complex. From dwindling lithium supplies to automakers rethinking production, there's more to the story than meets the eye. Join us as we uncover the top 7 reasons the EV market's growth may not be as unstoppable as it seems. Buckle up. Let's dive into the truths that could redefine the EV industry. Truth number 7. The fading lithium rush. Why demand for lithium is taking a hit. The lithium rush fueling the electric vehicle boom is losing momentum. In Argentina's salt flats, lithium prices have dropped over 80% compared to last year, signaling an oversupplied market and slower than expected EV demand. This slowdown has forced companies like Galen Lithium to scale back production plans. In lithium-rich countries like Chile, Zimbabwe, and Argentina, mining giants are adjusting targets, and smaller firms are merging for stability, evidenced by Rio Tinto's $6.7 billion acquisition of Arcadium Lithium. As automakers cut EV production, demand for lithium has dropped, creating unsustainable conditions for costly mining operations. With forecasts now more cautious, the inevitable lithium demand appears overly optimistic, and the consequences are reshaping the entire battery industry. Truth number 6. CATL's troubles. Can the battery giant hold its ground? Even industry leader CATL is feeling the pressures of the volatile EV market. In its recent Q3 report, CATL saw a 12.48% drop in revenue, despite a 26% increase in net income, highlighting challenges in maintaining profitability. The company faces difficulties balancing production costs with affordable pricing, especially as lithium and other material costs fluctuate. CATL's troubles are compounded by the temporary closure of its Jiangxi mine, limiting raw material access for future battery production. If these issues persist, automakers relying on CATL might experience delays in new EV models, affecting market growth. CATL's struggles suggest that even the biggest players in the industry may not be immune to market uncertainty. The question remains, how long can they hold out? Truth number 5. Automakers pulling the plug on EV dreams. Automakers are scaling back their electrification goals due to financial and practical challenges. High production costs, especially with fluctuating material prices like lithium, are a major hurdle. BMW CEO Oliver Zipse has raised concerns about the feasibility of full electrification, particularly with Europe's 2035 combustion vehicle ban looming. Companies like Ford, GM, and Stellantis are also dialing back plans for electric trucks and models, opting for hybrids and alternative options instead. This shift reflects the industry's recognition that a full transition to EVs may not be feasible in the near future. Could this slower pace of electrification mean the electric revolution is taking longer than expected? Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Truth number 4. Consumer doubts. Why many are still on the fence about EVs. Despite significant pushes from automakers and governments, consumer skepticism is a major barrier to EV adoption. Factors like high upfront costs, limited charging infrastructure, and concerns over range continue to deter many buyers. In the US, EV sales have been slower than expected, with some estimates suggesting EVs make up less than 10% of the market. Many consumers find that EVs don't meet their practical needs, especially with high ownership costs and insufficient charging options in some areas. Additionally, surveys show concerns about EV performance in extreme weather and their resale value. These factors create a significant challenge for the industry and suggest that a universal shift to EVs may not be realistic without addressing these issues. Until these concerns are resolved, widespread adoption may remain out of reach. Truth number 3. Changing policies and dropping incentives. The EV market's fragile support system. The reduction of government incentives is becoming a significant hurdle for the EV market. In Germany, the end of generous subsidies led to a 37% drop in EV sales over a single summer, highlighting the market's reliance on such support. Similarly, in the US, the EPA has scaled back electrification goals, signaling a shift from aggressive EV policies toward a more balanced approach that includes hybrids. While some argue that subsidies distort the market, others see them as essential to bridge the cost gap and make EVs more accessible. As government support continues to decline, the future of the EV market becomes increasingly uncertain, and the industry may struggle to sustain momentum without this backing. Truth number 2, falling short of forecasts, the reality behind EV sales data. Despite year-over-year growth, EV sales have not met industry expectations. In the US, for example, sales growth slowed to just 25% in Q2, revealing a gap between projections and reality. This underperformance is especially evident in mature markets, where early adopters have already switched to EVs, leaving a more skeptical mainstream audience. Although forecasts once predicted EVs would capture a double-digit market share by now, current projections show market penetration remains low. These figures highlight the industry's struggles to meet electrification goals, signaling that while EV growth is steady, it may not be enough to drive the widespread adoption many hoped for in the coming decade. Truth number 1, financial struggles, the steep costs of EV production. Profitability remains elusive for many automakers producing EVs. High battery costs, making up nearly a third of an EV's price, contribute to enormous production expenses. Companies like Ford have reported billions in losses, highlighting the financial obstacles that EV makers face daily. Automakers are caught in a tough spot. They can either lower prices and accept losses, or keep prices high and risk reduced sales. This dilemma has led some to rethink whether large-scale EV production is sustainable, with profitability likely years away. As long as production costs stay high, the industry will struggle to maintain momentum, especially if consumer demand doesn't rise quickly enough to offset expenses. Until EVs can be produced more affordably, achieving true financial viability remains a distant goal. The big question: is the EV market truly taking off, or are we in for a slow burn? After exploring everything from changing policies to financial challenges, it's clear that the EV market's growth is more nuanced than many believe. While EVs are advancing, they're heavily reliant on government support, fluctuating material costs, and consumer interest. EVs undeniably have a role in the future of transport, but achieving widespread adoption may take longer than projected. Alongside EVs, hybrids, alternative fuels, and advanced combustion engines might coexist for years, suggesting a more diverse automotive landscape than a purely electric one. Now let's hear from you. Do you think the EV market's current challenges are short-term hurdles, or are they signs of deeper issues? Share your thoughts and experiences in the comments. If you enjoyed this video, please hit like, subscribe, and stay tuned to Piston Pundit for more real insights. Thanks for watching. Until next time, drive safe and stay curious.